Rezolve AI PLC is currently trading live at $6.79, surging an incredible 8.21% in today's session. A move like this lights up watch lists and sends alerts pinging across every Fidelity mobile app and sofi trading platform. The immediate, instinctive reaction for most people seeing an 8% gain on their screen is to feel a sense of urgency, a belief that some transformative news has broken and they need to get in before the real move happens. But this is precisely where the gap between the average market participant and the professional investor becomes a chasm. A detailed look into the trade flow and the volume behind this spike suggests this isn't a broad retail-driven reaction to a press release. Instead, the characteristics of this rally point towards something more tactical, a potential deliberate squeeze on short positions, engineered to exploit the stock's low float and force a cascade of buying. The real story today isn't about what Rezolve AI did as a company, it's about what a small group of well-capitalized traders are doing to its stock. The overwhelming expectation generated by a bright green 8% candle is one of pure optimism. Investors engaged in self-investing see this as validation. The story they bought into, the frictionless mobile transaction technology, is finally being recognized by the market. On social media and stock forums, the narrative will be forming that a major partnership is about to be announced, or that a bullish analyst report is circulating among institutions. This kind of price action is intoxicating, especially for those newer to online investing, as it seems to confirm that they've found the next big thing, perhaps the next Nvidia stock in its early days. They see the upward momentum and assume it's backed by a significant improvement in the company's fundamental prospects. This perception frames today's move as the beginning of a sustained breakout, a signal to add to positions or initiate a new investment before the price runs away completely. This is the simple, powerful, and often misleading story the ticker tape tells. However, the reality of the situation requires a much more skeptical and analytical approach. Digging into the intraday trading data using the kind of tools available on an interactive broker's platform reveals a telling pattern. The surge occurred on relatively low, albeit above average, volume. A genuine news-driven breakout is typically accompanied by an overwhelming explosion in trading volume, sometimes 10 or 20 times the daily average, as the entire market repositions. What we see here is different. We see sharp bursts of buying activity followed by periods of quiet consolidation, a pattern often used by traders to walk a stock price up without attracting too much attention. This is a classic setup for a short squeeze. In a thinly traded stock like Rezolve AI, a motivated buyer can absorb the available shares for sale, pushing the price up to levels where traders who bet against the stock, shorts, have their stop-loss orders triggered. This forces them to buy back shares to cover their position, adding more fuel to the fire and creating a self-perpetuating upward spiral. This isn't about fundamentals, it's about market mechanics. It's a strategic game that has little to do with the long-term value proposition that might appeal to a client of Fidelity Wealth Management or someone building a diversified portfolio with Fidelity ETFs. So let's bring this back to the company itself. What does Rezolve AI PLC actually do? And does its business justify this kind of volatility? As we've discussed, Rezolve AI provides a mobile engagement platform. Its core offering is a software development kit that enables triggers in media. You can point your phone at a TV show, a magazine, or a poster, and the technology facilitates an instant interaction, often a direct purchase. The business model relies on licensing this technology to other businesses, making it an infrastructure play rather than a direct-to-consumer brand. The potential is significant, but the road to widespread adoption is long and fraught with challenges. An 8% jump in market capitalization, adding millions of dollars in valuation, is difficult to justify on a single day without any tangible news about a new client or a technological breakthrough. A prudent investor, perhaps one using Schwab Intelligent Portfolios for automated asset allocation, would view today's price action as noise, not a signal. It doesn't change the company's cash burn rate, its revenue projections, or its competitive landscape. It's a momentary frenzy that is detached from the underlying corporate reality. This detachment is critical for anyone managing a serious portfolio, whether it's an individual brokerage account or their Fidelity IRAs. The financials for Rezolve AI are still those of a developmental stage company. It requires significant capital to fund its operations and sales efforts, making it inherently speculative. While it may one day become a profitable enterprise, its current valuation is based almost entirely on future expectations. Today's 8% rally doesn't make the company more likely to achieve profitability tomorrow. In fact, for short-term traders on platforms like Robinhood, this volatility is the attraction. They can use Robinhood crypto and Robinhood stock trading services to make quick bets. But for long-term investors, this is a distraction from the key questions. Is the company signing new deals? Is it managing its cash flow effectively? Is its technological moat, possibly protected by patents, strong enough to ward off giants like the ones behind Apple's stock? These are the questions that determine long-term success, and they are not answered by today's price spike. Any sound investment help would advise looking past the daily chart and focusing on the quarterly financial reports and shareholder letters. Looking forward, today's dramatic move sets up two very different potential scenarios. In the first scenario, the short squeeze runs its course. The motivated buyers achieve their goal, the short sellers are forced out, and the stock gradually drifts back down as the artificial buying pressure subsides. This is a common outcome for technically driven rallies and would likely see the stock retest its previous support levels in the coming days or weeks. In the second, less likely scenario, this rally is indeed front-running a significant piece of news. Perhaps a deal has been signed but is not yet public, and a few well-informed parties are building their positions in anticipation. If a major announcement does materialize in the near future, today's buyers will look like geniuses, and the move will be seen in hindsight as the start of a legitimate new uptrend. The challenge for anyone managing their SoFi stocks or SoFi ETFs is figuring out which scenario is more probable. What's your take on this sudden surge? Based on the lack of news, do you think this is a genuine breakout driven by smart money or a temporary short squeeze that will fizzle out? Comment breakout or squeeze below and let me know your reasoning. Ultimately, navigating this kind of situation depends entirely on your investment philosophy. A professional day trader using the sophisticated order types on Interactive Brokers Trading might see a clear short-term opportunity to profit from the volatility. They could trade it on both the long and short within the same day. However, a long-term investor building a retirement portfolio through Fidelity Investments, who's focused on Fidelity mutual funds and dividend-paying blue chips, should rightly view this as a spectacle to be ignored. It's a reminder that not all price movements are created equal. Some are driven by fundamental shifts in value, while others are driven by temporary market imbalances and strategic gamesmanship. Understanding the difference is a crucial skill for anyone serious about online investment and seeking to build lasting wealth. The abundance of investing sites and the ease of access through a Robinhood app have made it easier than ever to trade, but it hasn't made it any easier to invest wisely. In conclusion, the powerful expectation created by Rezolve AI's 8% rally today is one of sudden, positive change. It presents the image of a company on the move, a stock that is breaking out and leaving skeptics behind. But the reality is likely far more technical and mundane. The patterns in the trading data point not to a fundamental shift, but to a calculated maneuver within a low-float stock, a short squeeze designed to exploit market mechanics. This event serves as a masterclass in the importance of looking beyond the price and understanding the forces that move it. While the ticker shows a triumphant surge, the real story is a cautionary tale about the difference between momentum and substance, a critical distinction for anyone aiming to succeed in the complex world of the stock market. If you enjoyed this video, smash that like button. Don't forget to subscribe for more awesome updates. Hit the bell icon so you never miss a notification. Disclaimer: this content is for educational purposes only. I'm not giving any investment advice. Please do your own research and consult a financial professional before making decisions.